So what if the market conditions change? What if there's a crash? Hey guys, welcome to another Thursday Q&A with Smart Real Estate Coach. I can't tell you how many times I get this question by email, by text, by coaching call, in a mastermind call. So I wrote down 3 or 4 things because I don't want to leave one of them out for you guys. Listen, what we're doing is not going to get you out of a national disaster. Okay, there's no fail-safe, hit the button and get out of it. Sorry to say. But what can you do? How will you react? What can you build so you're better off? In no particular order. Understand that the contracts and the forms that you're using are critical. For example, our sandwich lease forms have the ability for us to assign it back to the owner. So on occasion, if we call the owner and say, look, I need more time, and here's why, 9.9 times out of 10, I have one exception in several years, they're gonna say yes, as long as you're logical about it. You need an extension. And so that's one way of doing it. Secondly, the term in general that you negotiate when you start. Now, if you're taking a subject to, you get rid of that issue when you own the house. That's better. But if you're doing an owner financing deal or a sandwich lease, can you just do longer terms? We've written deals at 9 years, at 7 years, at 3 that had a 3-year extension. Get real good at getting the terms extended as long as you possibly can. Next, don't ever, how many times can I say ever, sign personally, ever. So if the market does go down, you're not signed personally, you're in a contract that you can probably give back to the seller, and you go to bed at night putting your head down knowing that you're okay, nobody's chasing you for anything. Next, personally signing on debt. Forget the agreement for a second. Personally signing on debt, same issue. And last but not least, how about if you never ever put your debt to equity, your debt to value on any of your personal things over 30%. Me personally, I like 20%. But back in the day, I'd be at 90 to 100. That's a problem when the market goes down. The last but not least is the cash flow. How about if you put enough deals in the books, on the books, so you're having paydays 1, 2, 3, cash flow like crazy. We're in a private jet right now, and I just showed one of our students at the 6th of the month. 6th of the month. The money in and the money out on payday 2 right now, the spread's about 23 grand. We're not even done the month yet. Is that gonna help you get through a couple bad months if you get that kind of cash flow on payday 2 only coming in? Yes. So build a cash flow machine. Don't worry about that, but don't think there's a quick answer. There's not. You just gotta get good at it. Join us next week for the Thursday Q&As. Make sure you subscribe to the channel because every single week we come at you with these, with the Deal Structure Sunday and with the Motivational Monday. Look forward to seeing you next week. Make sure you type your questions below and we'll get to yours in due time.